This is Sean Tongson from thepress.net. Joining us this afternoon is Miss Erin Summit. She's a senior mortgage broker from Empire Home Loans, and she's here today to talk briefly about mortgages. Good afternoon, Miss Summit. Thank you for joining us today.
Hi, Sean.
My first question, how does one qualify for a mortgage loan?
Very good question. To qualify for a mortgage, there's really three factors that are kept in consideration. One is the person's income, one is their credit, and one is their assets, which basically mean what they have to put down for the house and to use for closing costs. So to qualify for a mortgage, the loan officer is going to require documentation to prove all three of those.
How are mortgage rates doing these days?
Oh, that's the golden question. And if I had a crystal ball for you, I could tell you where we're headed. Mortgage rates are a lot higher right now than people have been used to for the last several years. So we've tipped into the 6% and even into 7% for some different products. For the first time, government loans are actually cheaper than conventional loans, even with mortgage insurance. So it's very, very unique right now. So even though the rates are a little higher, there are a lot of advantages right now for first-time home buyers and a lot more programs out there. So I would say, don't look at the interest rate right now. Look at the programs that are out there. And also just know that the rates are temporary. So most loans do not have prepayment penalties, which means that even if you get into a loan right now with a higher rate, you can refinance later to a lower rate and a lower payment.
What has caused mortgage rates to increase in recent months? And when do you anticipate them to go down?
Okay, so the reason for rates increasing, good question. We had it was almost a facade happen over 2020 and 2021. This was during COVID. It was not something that we're used to with the pandemic. And what happened is the economy got terrified, right? When we all shut down. And that created rates to drop a lot. And during that time became a frenzy for people to refinance and to buy because, I mean, I think you could agree that at a 2% interest rate, it's almost free, right? So everyone wanted to buy. And at that time, the demand to purchase a home became so much higher than the supply. What happens in that? It makes the values go up really quickly. So when that all happened, I mean, felt like what happened in 2006 and 2007 was going to occur again, and there was going to be a bubble that burst. That didn't happen for the fact that loans are a lot more secure now. People have to qualify. You don't just take a pulse and you can qualify for a mortgage like you could in 2004 and 2005, remember? So because of all that, it's been correcting. The market I would say is more correcting than causing this halt, right? With that, as we all saw the last couple of days, there have been huge banks that have failed. And when huge banks fail, some people get scared. I've been through this already, 2007 and 2008. I'm just sitting here waiting because I know from the past, history repeats itself. And when these kind of things occur, rates actually get better. So I do expect sooner than later for rates to get better. Before these banks failed, the timeline was Q3, 4 of 2023 or into 2024. So I think we are still very much on track for that.
And lastly, Ms. Summit, what advice would you give to anyone who may be trying to qualify for a mortgage or purchase a home today?
That's the best question yet. What they need to do first is talk to a mortgage broker like myself or any other loan officer, get their credit pulled. Most people do not get their credit pulled by a mortgage person, and that's just a hard pull. It shows a lot more than any of your Credit Karma or freecreditreports.com. Get that pulled, make sure everything on there is accurate. Let them advise you what you need to do in the next 6 or so months to make that happen. Make it happen, meaning make your credit score where it needs to be and your debt where it needs to be. And then they need to evaluate your income. That way they can tell you where your credit and your debts are, if you need to pay down some debt in order to qualify, or if you're right on target to where you need to be. That way you're set up. The best solution is to talk to someone sooner than later to be set up for success.
Thank you for your time today, Ms. Summit. I appreciate you taking the time to help us, and wish you the absolute best. Thank you.
Thank you, Sean.